Good morning, I'm Malcolm Graham Wood from Malky's blog, and I'm here at Core Finance TV for my usual CEO interview. And today my guest is Andrew Knott, CEO of Savannah Petroleum. Nice to see you again, Andrew. Welcome back.
Good to see you, Malky.
Good to see you. As usual, maybe just a small overview of the company for those who don't know it very well, because we've got plenty of other things to talk about today.
No problem. Okay, so Savannah Petroleum is an AIM-listed oil and gas company. We've been around for 4 or 5 years now. We started off in the central West African country of Niger. We have a very high quality exploration business. We've made 5 discoveries from 5 wells, and we intend to soon put that into production. And then we've just completed today the acquisition of a very substantial oil and gas business in Nigeria, which ultimately supplies about 10% of the country's power, and is expected to generate very significant cash flows for our business going forward. So, and the key things that I hope to talk to you about today is just what the growth is going forward in both of those businesses, and really people start to understand what's going on now we've finally completed the transaction.
Excellent. Well, those are the words we've all wanted to hear. So, completed the long-awaited Seven Energy transaction. So let's break it down a bit. Let's give us an idea of what this means to the company. It's clearly a transformational deal for you. So let's walk through in a bit more detail some of the things you just mentioned.
Okay, so the rationale for the acquisition was the assets became distressed. There was a series of things that we did to take them out of that distressed position, a massive reduction in the debt burden, and also on the payment guarantee side, we got JP Morgan and the World Bank to guarantee a very significant portion of the revenues, to the extent that about 95% of those revenues are now against what we would characterise as investment grade credits. So that value arbitrage, we believe, is going to be very powerful, and it also establishes in Nigeria, which is a very high growth country itself. The cash flow generation is expected to be very significant. If you look at the audited numbers that were last published on it, if you assume, there's different ways to look at it, but if you take the DCQ volumes, the contract quantity volumes, there's an average of about $150 million of asset level free cash flow coming through the business over the course of the next 5 years, which is clearly significant for anyone. And
you get a lump sum up front.
Yeah, so there's there's a lot that we partnered with a very good company to do the acquisition, African Infrastructure Investment Managers, which is the largest and oldest private equity infrastructure firm in Africa. As part of the transaction, we're back-to-back selling 20% of what we're buying for $54 million to AIM. And then there's an additional $20 million of sort of deferred proceeds from the transaction, which we expect to come in and close. So there's a $74 million inflow and close, which is obviously helpful.
It's a very good start. Now, this is a full cycle E&P company, so you'll be doing everything from, you'll have an exploration portfolio, but you also do midstream and so on. So just explain a little bit more about how that works from and also that, I was quite surprised, you said this company is 10% of Nigeria's power demand. Yeah. That's a lot of power.
Yeah, so in terms of what we do as a business, so very simply, from the gas molecule in the reservoir all the way to the ultimate seller, we essentially control the destiny. So we now operate the upstream portion, we operate the midstream portion, and we own the infrastructure that takes it to the customer. That's really, really important. It's quite a different position from when we originally looked at Seven, who was largely non-operated through the value chain. That means we control what's going on. It means we can effect changes and hopefully make a positive impact on the assets. So that's what we do. We basically produce and deliver gas to customers. Now, the good thing about the infrastructure is it's very significantly underutilised today. There's very substantial free capacity, and it's the only infrastructure of its type in the region. So what that means is that we are expecting and hoping that we will be in a position where we can announce new gas sales contracts, which will not, the incremental cost will be relatively limited because the assets are largely ex-capex, and then the future revenue should be quite significant. So there's an awful lot of financial and operational gearing that we have to new gas sales contracts, and that clearly in a country like Nigeria, with its economic growth, with its population growth, is a very high power demand country.
Yeah, and you like Nigeria as a company anyway, but the geology in Nigeria is obviously excellent as well, isn't it? Giving you a great chance.
So as a company, full stop, our general view is we want assets with very, very good, high quality subsurface potential, and then we're more willing to embrace risks above ground than we are below ground. In Nigeria, definitely, from a subsurface perspective, it's recognised as a world-class oil and gas jurisdiction. You've had nearly $400 billion of capex in the country from the oil and gas industry since the 60s. There's been estimates that it contributes 14% to the major oil companies' cash flows. So it's a very significant jurisdiction, and there's a lot of opportunity for a medium-sized company such as us, because there aren't a lot of medium-sized companies such as us.
Yeah.
And that whole process of the emergence of a sort of an independent oil and gas sector is still very early stage. And
you're going to be market leaders in this process with this company. And AccuGas, which is the bit I've always liked to look at particularly, is not only is it a good, profitable business, but there's spare capacity in that business as well, isn't there?
Yeah, so that's, if we add those additional gas sales contracts, AccuGas will be able to transport and process that gas. So, and it's not just adding the gas, the customers, we can also take on third-party gas as required, or do deals with Savannah from an upstream perspective to acquire third-party gas, which can go through it. There's 40 trillion cubic feet of gas within tie-in range of our infrastructure. So there's a very, very large opportunity set, we believe, for us to monetize additional gas molecules.
Excellent. Before we move on to Niger, just finishing on that, now that you've completed on the business, you're going to be in a position where it is all the blocks have been put together, and you'll be going straight in. You receive the cash input. So as from, immediately, as soon as you get back to the office and say, right, we're going to there, and you've got all the ability to work with your management team on the ground and in London. I know you've always had a very strong team of management, so your team is going to be able to deliver the business appears.
One of the unique things about this acquisition for a company of Savannah's size prior to the transaction is that it was we bought assets which were certainly relative to our market cap much bigger than us. Okay, and with that what that meant was that we made that sort of that big jump. But we've always had a management team which is by and large used to managing much bigger projects. And the assets themselves are capital invested. So what I mean by that is we're not doing a big complex development or something like that. We're basically taking what is there, and there will be some enhancements that we make, but by and large we're taking what is there, running the business, and then trying to add new customers. So it's not a complex business, and the technology required to do this is not complex either.
No. Well, that's good. Now, you'll be able to get back to Niger, where you had a very successful drilling campaign in 2018, and obviously this has been held up for all this, but tell us about what you're going to be doing now in Niger.
So look, I think Niger is it's a funny situation. I think it's sort of been forgot about in the scheme of things with closing. I mean, Niger has an awful lot of very unique characteristics. You have a basin which has an overall 80% exploration success rate. You have a major oil company which not only has, in a very quick period of time, they came in 2008, by 2011 they built a pipeline and a refinery. They've just announced another, I think in aggregate, $8 billion investment in country, doing a big upstream development and building a pipeline from Niger to the coast. Yeah. So all the infrastructure logistics is there. We have an asset base where we've identified over 146 structures that we'd like to drill. We estimate the finding cost at about $1 a barrel. The value of these discoveries is up to $6 a barrel. And we've proven the business model because we've made those first 5 discoveries. And look, if you wind back to when we first started talking about the Niger business, there were questions around, was it financeable? There were questions around whether there was any oil there. There was questions whether we could operate there. And it was all like, oh, fine if you can do the first 3, but you're never going to be able to sell it. Yeah. We've already done a deal which we've announced, which will let us sell crude to the local refinery. Yeah. And we have contractual rights to be able to access the contractual and legal rights under the Petroleum Code to be able to access the pipeline that's being built. So we now have 2 different monetization routes. We still have this big asset, and we've sort of proven that we can operate everything.
So when you get up to a certain level, you'll be selling to Zinda, the refinery.
Exactly. Yeah.
And then after that, you'll have the ability to go use the pipeline, and the pipeline will be 18 months' time. Yeah. So you'll have the opportunity with every well that you drill to.
And clearly, we've always said that we view this asset as potentially world class and very, very large. Now you've got that very visible answering to the monetization issues. There's a lot of, and there was also a very large oil discovery in the area to the north, made by Sonatrach last year. That means there's a lot of industry attention around the province, and so it's likely we'll bring in a partner next year, but we'll do the well test. We fully intend to do the well test. We fully hope to start doing a large exploration drilling campaign, and I think the assets have sort of spoken now. It's very, very clear. I mean, there's a lot of information, everything we're discussing, by the way, in our presentation. But then, I guess for viewers that aren't so familiar with Savannah, if they look in the annual report on pages 6 to 9 is my shareholder note letter, and that really goes through where we've come from, where we're going, and why we've gone the path we've gone. And I would encourage people to look at it, really, because that really will give you a strong idea of who we are and what we're all about.
I think that's a good idea, and you'll be starting that programme with the testing back in the spring of next year. That's
the hope. We haven't officially announced exactly when we're going to do it, but doing that flow test is a key strategic priority for the business, because then you'll be able to move, we expect, into the trucking phase immediately, and then you start. It's a very different proposition when people understand that if you find oil in Niger, it's going to turn into cash flow quickly.
Excellent. Time is nearly up, so I just wondered if you could put all that together and just say, the same question I always ask you is that where you would like to see Savannah in 12 to 18 months' time. You've had a real, transformational deal. You've got a lot of things been on the go. Where do you think you might be this time next year?
Okay, so this time next year, I would anticipate that we have signed additional gas contracts in Nigeria, and so the expectations around revenue, etc., I would expect to have moved north. I would expect that we have done the flow test and are producing oil in Niger, and that we've made further oil discoveries in Niger. I think there's a reasonable chance that we will have formed other partnerships for things like the marginal field round, which I would expect will provide us with incremental sources of value creation potential. And I think the other thing which we haven't touched on, but I think is important, is that while I think there's been a perception that everything's complex because the transaction was a complex one to do, the reality is for a company like us to do the sorts of things we've done, if it's very easy to do, everybody's going to do it. And I think we've proven that we can do difficult stuff. But now it's a very simple thing. We own a business in Nigeria, we own a business in Niger, and they're both super simple. So what that means is now we're in a position where I think we can go around and explain to people in a lot more detail what the business is and what the growth opportunities are in both countries, and they're both very significant. So, in short, I expect us to have grown both businesses, very substantially over the course of the next 12 to 18 months.
Andrew, thank you very much for joining me today.
Thank you so much.
My guest today has been Andrew Knott, CEO of Savannah Petroleum. I've been Malcolm Grahamwood. Thank you very much for watching, and see you again next time. Bye now.